Good afternoon, everyone, and thank you very much for joining us today. We've got an exciting webinar ahead where we are going to be talking about how to become a UK property landlord from India. We've got a very special guest with us this evening, Sophia Kazmi from Maidwell Group, who is going to be talking about how to finance your investment from overseas and from India in particular. So look, today on this webinar, we're going to talk about a little bit about us as a business and what we do and how we can help you and how we guide you through the process. We're going to talk a little bit about the UK property market and the benefits of investing into the UK. And then Sophia is going to come on and talk about financing your property from abroad. And then we're going to talk about a brand new, exciting opportunity that we've just launched, which is one of the most exciting opportunities that Joseph Mews has ever been involved in. So we'll cover that in a bit of detail as well. Look, throughout the webinar, we'll be having poll questions, and at the end we will be doing a Q&A as well. So look, feel free throughout the webinar to put questions in the Q&A. And Sophia and I will get to them at the end, and we'll answer them as best we can. Okay. So look, without further ado, let's crack on and we'll start talking about who we are as a business. So a little bit about us. We were founded in 2001 by this man that you can see on the right-hand side of your screen, Mr. Andy Foote. Andy is a prolific property investor himself. And he started his kind of investment journey when he was quite young. He was very dissatisfied with the customer service part of it. And this kind of prompted Andy to do something about this and actually start a business off the back of it. So he started a company called Seven Capital Group. Seven Capital are now one of the biggest developers in the UK. And what Andy did was taking control of the kind of sales and distribution arm, where we had kind of teams based all over the UK selling Seven Capital's developments off plan. And look, they had a incredibly successful period, delivering £854 million worth of portfolio and helping over 2,500 clients throughout that duration. A few years ago, we rebranded to Joseph Mews Property Group. And the reason for doing this is we wanted to have a bit more flexibility in terms of who we work with. We wanted to work with other developers like Seven Capital, and we wanted to offer our clients some other options in terms of location, in terms of price point, and in terms of investment opportunities. So it's proved to be really successful with us, and it's a new era for us moving forward. And we've managed to build some incredible relationships with developers and consultants back in the UK. As I said, we'll be talking about some of our opportunities later on in the webinar. Next slide, please. So just to dive into our performance and what we've achieved here at Joseph Mews. Look, we understand that investing overseas can be quite a daunting process. And a lot of people, especially if they're kind of doing it for the first time, don't know really where to start. And it's important to use a company like us that you can trust and rely on. So one thing to kind of help you feel that we are trustworthy, I guess, is the track record that we have. So we've sold and marketed 4,270 apartments. We've been involved in 43 different developments, and we've helped deliver £632 million worth of gross development value to our clients. Next slide, please. So just to follow on to that, with the partners and developers that we work with, it's important to understand who our partners are on the ground in the UK as well. And as I previously mentioned, we kind of moved away from Seven Capital Group to work and build these relationships that we now have over in the UK. So, a lot of these names won't mean much to you. They are mostly developers that we've built these relationships with. But you might notice the two at the top right-hand side, JLL and Knight Frank. These are two of the biggest property companies in the world. Knight Frank in particular, we have an exclusive relationship with them in the Midland area in the UK, where we are their exclusive partner over here in the Middle East. And that's kind of testament to us as a business that we've been able to build these relationships over time. And it's important to know as well that all of these developers that you see on the screen here, they're our exclusive partners. So we are the only distributor for them overseas. And it helps in the long run, through this whole process, through this investment journey. We have a lot more control over the process and a lot more flexibility as well. Okay. Next slide, please. So to dive into the customer service journey, and this is incredibly important. As I've touched on before, it can be a daunting process investing overseas and investing into a market that you don't necessarily know too much about. But look, whether you've been to the UK, whether you've never visited the UK, it doesn't matter. We're here to kind of help you and tell you about the benefits of it all, but also to kind of guide you through the process and give you this hand holding process, where we take you through the journey. So from the point of reservation to introducing you to someone like Sophia who will take you through the mortgage process. Once we get into the legal side of things, we would introduce you to the right legal team. We've got a panel of lawyers that we work with every development in every location. We've got a customer care team that will be in constant communication with you throughout the process, giving you updates on everything that's happening. If you're buying off plan, for example, give you updates on the build process and things like that. So, and then when we get to the kind of tail end of the process where we actually complete, and it's kind of the cornerstone of every investment is who's going to rent my property. We've got relationships with some of the biggest and best lettings and management agents in every location that we work in, and we would introduce you to them prior to completion. They will take the key off the developer. They will find you a tenant, and they will manage your property for you as well. So all of this is done for you. You're introduced to the right people the whole way through the process, and obviously Joseph Mews are here with you as well. And it's a very hands-off process. When you're actually renting out your apartment, the lettings and management team that we put you in touch with will be the ones that are in communication with the tenants. If there's anything wrong with the apartment or the tenants, they will look after that for you. They will take the rent and they will send it to your bank account. So as I said, everything is done for you. It's a very hands-off process, and you're sat overseas invested in an asset that is going to appreciate over time. So this whole process is super important, and it's exactly why Andy started the business in the first place, to be able to provide this journey that makes it as stress-free as possible. Next slide, please. As I said, guys, at the start of the webinar, please feel free to drop any questions that you have in the Q&A box during this webinar, and Sophia and I will get to them at the end. Thank you. So we've got our first poll question. So please, if everyone can get involved, it'd be really useful, and we can talk about it after you've voted. So what is your primary objective for investing in UK property? We have building capital appreciation. We've got generating passive income, creating long-term investment portfolio, or looking for immediate returns. Okay, so what we have here, generating passive income through rental income, seems to be the most popular answer. And yeah, look, that's exactly what we look to achieve with our clients. Buying a property or building property portfolio over time, obviously that's what we want to achieve, is once you get to a certain point in your life, whether it's retirement, whether it's helping your kids or whatever it may be, we want to be getting a really good income from the investments that you buy. So look, that's why we're very specific in terms of the developers that we work with and the locations that we work with, because we're working in the locations around the UK where we get the highest yields and we get that positive return that we want. So look, that's what we're here to do. Obviously, building a capital appreciation as well, which we've seen here. That's a very, very important part of the process. You know, as I will touch on later in the webinar, buying in the UK is a mid to long term strategy. So again, working in locations where we're going to see that growth over time, and we're going to get you that really good return on investment. And you know, again, creating long-term investment portfolio diversification. Property is a great way to diversify your investment portfolios. And again, you know, we're going to talk about that a little bit more in later on in the webinar. So why invest in the UK? And look, I just want to give a quick overview of the UK property market. Okay, now you need to, with any investment, especially with property, you need to understand the market that you're investing in. Okay, now the UK is one of the oldest and most invested property markets in the world. Okay, and the reason for that is because of its safety and its stability. Um, yeah, we can kind of predict where property values are going to go, and you can kind of see this from this graph. It is a mid to long term strategy, as I've said. You know, you need to hold on to that to your investment for a minimum of 5 years, I'd say, but we'd say anywhere between 5, 10, and 15 years. That's when you're really going to see the return on your investment, even um, through economic downturns or world events. The UK property market is held incredibly strong. Now, it's no secret that there's some negativity around the UK at the moment because of its government and everything else. But the UK property market is what is holding really, really strong. You know, if we compare this to, you know, other markets, Dubai, for example, I'm based in Dubai. There's a lot of positivity around Dubai. Um, but it's an unpredictable market. You know, look, I'm not saying that people haven't done very well. People have done well, and you know, there's a lot of buying and selling, and people have made good returns very, very quickly. But it's only been like that for 5 years. You know, and it's a market that's been around for 15 years in total. So, and in those 15 years, it's been very, very volatile. So I can't tell you where the Dubai property market is going to be in 5 years' time. But I can tell you where the property market and the values are going to be with the UK market in 5 years' time. So that's what you're investing in. You're investing in that safety and stability, which is super important. And one of the reasons why that we see this safety and we know where property values are going to go and why we get that continuous growth is because of supply and demand. And that's on the next slide. So supply and demand is a bit of a problem in the UK, but it's great for people that are investing in the UK. We have always had a problem with undersupply and over demand. Okay, and you know I've worked in the UK property market for most of my career. I've worked for a developer for a long time, and I've seen it firsthand. It's we don't ever hit our housing targets. You know, there's a bit of a more of a rigorous process that you have to go through with actually developing in the UK. You know, there's a rigorous planning process. Cost of construction has gone up quite dramatically in the last 5 years. And you know, there's limited land available. So, you know, being able to hit our targets has proved to be very, very difficult. So we've always had this supply and demand problem, which is pushing property values only one way, in a positive way. And to be honest, it's only getting worse. So, you know, this is why you're in safe hands with investing in the UK. And this is why we're going to see property values and rental values go up continuously for the foreseeable future. Next slide, please. So we've got another poll question. What is your biggest fear when it comes to investing in UK property? Potential changes in government regulations and taxes, interest rates affecting mortgage affordability, difficulty finding suitable tenants and managing voids, unexpected maintenance costs and repairs. So we have potential changes in government regulations and taxes as one of the most popular ones. Yeah, look, I mean that's always a little bit unpredictable, to be honest. But look, the government relies on overseas investment, especially for the property market. And the taxes or regulations are not going to change too much from where they are, because the government they need that overseas investment. So yes, it's unpredictable, and yes, things change. But from a property perspective, it won't change much more than what it is. If anything, it's only going to get better, because they need that overseas and that inward investment. So that's not something to worry too much about. Interest rates affecting mortgage affordability. I mean, look, Soph can maybe touch on this, but look, interest rates, yeah, they've gone up quite considerably uh, in the last few years, but they're now coming back down, and now looking a lot more positive than they were a year ago. So they are only going one way, and that's the Bank of the Bank of England rate is only going down, and so is the mortgage interest rates as well. So now is actually a great time to be getting a mortgage and securing a mortgage over that kind of 5-year period. So that's, it's understanding kind of the timing that we're in, and getting the right mortgage for yourself. Difficulty finding suitable tenants and managing voids. Again, this is something that shouldn't be too much of a consideration or a worry. We only work in locations and work with the right lettings agents, where we have that demand. Okay, now we'll touch on it again a little bit more later on in the webinar, but the UK has a very, very high rental demand all over the UK at the moment. So obviously it differs for location, but we have an incredibly high rental demand where we're seeing little to no void periods at the moment, especially for the right development for the right location. So that's something not to worry about too much. And unexpected maintenance costs and repairs. I mean, look, we only deal with new build property, so the maintenance costs and repairs are minimal. The build quality in the UK is a very, very high standard, and the developers that we work with, for example, deliver to a very high standard. So there will not be many maintenance costs or repairs needed with the properties that we are dealing with. Okay, next slide, please. So just to go back onto that, actually, where we talk about those void periods. So you can see here from these articles, the average home now has 25 tenants wanting to view. That's 25 tenants. I mean, per one home. So which is crazy. And look, I lean on my own experience here. To be honest, I have a buy-to-let property in the UK, and I put it on the market, and within the first day I had 8 viewings. Within the second day I had 4 offers, all over asking price. So it kind of just gives you an idea of the type of demand and rental demand that we have in the UK. And again, it's why it's such a safe investment, because you have that demand, and there's less buyers in the UK at the moment. There's less homeowners. It's a renting generation that we have now. So the rental demand is through the roof. It's the highest it's ever been. So in terms of your void periods, in terms of kind of rental growth as well, it's very positive. Next slide, please. And then we've got just some other evidence here. This graph that you can see on the right-hand side, house price growth is expected to accelerate. The likes of Knight Frank, JLL, Savills here, they're predicting that property prices in the UK are going to continue to rise over the next 5 years, which is something again that we can predict. It's just more evidence that we're going to see the growth that we want. Next slide, please. So why choose UK property from India? I mean, look, we've obviously talked about the benefits of the UK, and there's some bullet points here. of why, especially from India, why it ticks all the boxes, so to speak. Adds international assets to your portfolio. We've talked about diversification as well. Access to leverage, competitive rates, getting your mortgage, being able to borrow money to buy property. In looking at capital growth, cash flow, and hard currency. And then you've got tax advantages as well. I think in India, you've got this LRS tax advantages as well, where you can get £250,000 out of India to invest into the UK, and you can use that for every family member as well. Look, I'm not a tax expert, but that's something that's a real positive and something that we'll talk about in a little bit more detail. We have tax experts as well, which can talk to you in more detail about the advantages and what you can do to get around tax in the UK as well. So yeah, many benefits to it, and that's why it's proving to be very popular, especially for Indian investors. And as you can see here, this just kind of solidifies what I've just been saying. Indian investors are becoming one of the most dynamic buyer segments in the UK property market. More than 100 million in Indian investment creating UK jobs. So at the moment, Indian investors are some of the most prolific investors into the UK market. Next slide, please. So I'm now going to pass you over to Sophia, who is going to give you an overview on financing your property from India. Over to you, Soph.
Thank you very much, Chris, and good afternoon, everyone. Thank you for joining us today. So this afternoon, we're going to walk you through how you can obtain a mortgage in the UK from being based in India. I'm just going to walk you through the journey and particularly what your options look like as residents in India. So if we jump to the next slide, please. So we'll start off with a poll question. What do you think is the biggest challenge in getting a mortgage as an overseas investor? Would you say lack of credit history in the UK, opening a UK bank account, limited lender options, or a complicated application process? You can just select one from the 4 options. Okay. So the majority of you have stated lack of credit history in the UK, and this actually tends to be the most common answer that we get whenever we run this poll. And the short answer is you do not need to have a credit footprint in the UK at all to obtain a mortgage in the UK. In fact, some banks don't even require a credit report from where you live locally or where you are based locally. As an overseas investor, whether you are a first-time buyer, first-time landlord, seasoned investor, there are lending options out there. And we have put a case study together for you in a couple of slides just to show you what sort of mortgage options are available. But in short, we work with a range of different lending institutions across the globe, and there are lenders that can certainly lend to you as without any tie or footprint to the UK. Some of you have also answered opening a UK bank account. Now, that is something that we can assist with if that is required and if you do not have a UK bank account as of yet. Some banks, in fact, most banks will require that the direct debit and the monthly mortgage payments are made from a UK bank account, which has a UK account number and sort code. However, there are other banks that we can work with who do not require that. So should your preference be to have the mortgage repayments made from an account locally in India, as an example, then we can certainly arrange for that to be done instead. Limited lender options is an answer we get quite a bit at the beginning, and the short answer is there are a range of different lenders, offering different mortgage solutions, different structures. Yes, as overseas investors, you won't have access to the typical banks that UK residents will have, but that doesn't mean to say that there aren't options out there. There are lenders that will offer competitive pricing and competitive loan amounts as well, and importantly, all can be done from where you are based remotely. There is no need to travel to the UK at all throughout the whole process. And then finally, 3 of you have answered a complicated application process. And I think At times it can be one of the quite challenging, certainly if you do this yourself. However, by working with us, by working with Chris and his team, you're working with individuals and professionals who have worked in these fields for a number of years. We work very closely with the banks that lend to residents in India, as an example. As a result, we're very familiar with their processes, what documentation they require, their typical turnaround times, their timeframes. So we're able to avoid any, foreseeable complications and challenges. So we will package that application for you. We will manage the whole process for you. We will liaise with all the supporting services and all the teams involved throughout the process, the banks, the underwriters, the valuers, the solicitors. So you don't have to. Essentially, you provide us the documentation and then we do the rest of it. Next slide, please. So going into a couple more frequently asked questions we get. The first one being, and probably one of the first questions we get, is how much can I borrow? And this really just comes down to a lot of factors. It comes down to your financial circumstances. It comes down to how much how much are you willing to put down? What's the property going to rent for? There are a few different factors that impact how much you can borrow. Typically what we do is we go through a fact find together in our initial consultations. From there, once I've gathered the information we need in terms of your financial profile, any liabilities you have in the background, we will then put together for you a term sheet. And that term sheet will very clearly detail how much you can borrow and all the other costs associated, including the interest rate as well. We have also put together, as I mentioned, a case study in towards the end of this, the mortgage section of this slide, which will hopefully give you a clear idea as to what options are available to you as residents in India. Can I get a mortgage for multiple investment properties from India? Absolutely, yes. We work with over 750 different lending institutions across the globe. So with that, there are access to over 3,500 different products. So dependent on how you want to structure it, if you're looking at buying multiple properties or refinancing multiple properties, there are specialist lenders that we can approach who will offer you a bespoke product. They'll build a product sometimes that's right for you. And ultimately, we can then look at consolidating everything into one loan. And again, importantly, from where you are based in India. Can I get a mortgage if I do not have an income? In short, yes. If this is a property that you're buying for investment purposes and it's going to be generating a passive rental income, then there are lenders that we can work with who will base the assessment purely on the rent that the property is going to achieve. We also have clients, as an example, who are recently retired or do not draw a fixed salary from anywhere, in which case we work with banks that will lean purely on the rental income of the property and are able to assess the application based on that. And finally, what are the benefits of speaking to a mortgage broker? I think as we touched in the beginning, we work very closely with the banks. We know their processes inside out. We have close relationships with them, so we're able to at times escalate applications if need be, and just manage everyone's expectations involved throughout the whole process. As Chris touched on as well earlier, with interest rates fluctuating in the UK and having gone down to 4.5%, with the Bank of England base rate peaking last year at 5.1%. A lot of lenders are changing their rates quite quickly, changing their criteria quite quickly as well. So often there are banks who will sometimes set quite short deadlines and request that an application is submitted within a couple of hours of sending an email. So by working with us, one, we are made aware that those deadlines are being provided, and we can work towards those deadlines to ensure your application is submitted. But we also ensure that that application is submitted and successfully approved, again, in a timely manner. If you're working with the bank directly, you will not be privy to that. The banks won't inform you, and as such, if a rate is pulled at 5 o'clock, you unfortunately just won't secure that rate. So by working with us, we ensure that that application is approved, it is successful, and it's also done in time for when you need it. Next slide, please. So we put together a very brief summary of the benefits of investing with a mortgage, because we often have borrowers who come to us and, as you've seen, aren't aware that they're eligible to get a mortgage in the UK, particularly as first-time buyers, and also perhaps not aware of the benefits of taking out a mortgage and in particular leveraging. So this example just demonstrates the benefits of purchasing with a mortgage versus purchasing in cash. Now, it doesn't take into consideration the rental income and interest rates. This is just purely cash versus mortgage to give you an idea. So if we look at the first line, this is assuming one were to purchase a property in cash for £200,000 and hold on to it for 10 years. 10 years later, if you sell that property for £300,000, your investment was £200,000. Your profit is £100,000, which equates to a 50% profit on your initial investment, which was the £200,000 that you put down. Now, if we use that same property, let's assume going back 10 years, instead of putting £200,000 to buy one property, you put down £50,000 and you borrow the remaining £150,000 from the bank. 10 years later, again, you sell the property for £300,000. Your investment was £50,000. That's the deposit that you put down. Your profit is still £100,000. However, that equates to a 200% profit on your initial investment. And if we look at the next slide, it very clearly details that the £200,000 that you would have put into one property, you can instead put that in 4 properties, totaling a portfolio value of £800,000 whilst borrowing £600,000 in the bank. 10 years later, you sell each for £300,000. Your investment was £200,000, so same as in the first example, except now you've bought 4 properties. Your profit then equates to £400,000, which is a 200% profit on your initial investment of £200,000. Now, the other thing to bear in mind is, of course, typically investors in the UK, if it's a buy-to-let property and you're building a portfolio, most do not sell. Most will capital raise. So the additional £100,000 that has grown in equity in those properties over the last 10 years, you can capital raise, you can take that out, and you can reinvest that into another property. And very quickly, your 4 properties that you started off with will become 6, 8, and so on, and you can grow your property portfolio from there. So that's typically the model that investors will go for, but this hopefully just gives you a very clear idea as to the benefits of mortgaging and leveraging and how you can grow your portfolio. Next slide, please. So we've put together also, as I mentioned, a very simplified cash flow for you, just to show you what sort of mortgage options are available, what loan to values are available, what the interest rates look like today as residents in India. Now, this is for a client in particular of ours who is employed locally. They were buying their first buy-to-let property in the UK, so they did not have any UK footprint. And they were able to obtain a 60% loan to value mortgage. Now, it's important to note that there are options to go up to 65, 70, and sometimes even 75% loan to value. This borrower, however, wanted to put down a 40% deposit. So they only wanted to borrow 60% from the bank. So that equated to a loan amount of £234,000. They took out an interest-only mortgage, and the interest rate is a 2-year fixed rate at 6.38%. So that means, regardless of what happens in the market for the next 2 years, we've locked in the interest rate at 6.38%. That means that we can budget also for the next 2 years, knowing that the monthly repayments are going to be £1,244. So if we look at the column on the right-hand side now, we look at the rental income the property is going to generate, which is £1,700 a month. After taking off the service charges, letting and management fees, and the mortgage repayments, this borrower is left with £141 a month surplus, which equates to £1,692 per year. Now, bear in mind, of course, this is just year 1. Year 2, year 3, and so on. Every year that goes by, that rent is going to increase in line with the market. So your net cash position is expected to also increase every month. With interest rates expected to continue to go down as well, you can expect that when we come to remortgaging in 2 years' time, your monthly repayments are also going to be lower. So not only do you have the benefit of the positive cash flow every month and the increase in that year on year, you also have the benefit of the capital appreciation in the property. Let's assume you hold on to the property for 15 years and it's doubled in value. That additional equity that's built up in the property over the last 15 years, we can then look at capital raising, taking that out and reinvesting it into another property. So that's typically what investors will do. And that, again, that's how buy-to-let landlords will start off with one and very quickly build their portfolio from there, leveraging off their existing assets. Next slide, please. So I'm going to pass you now back over to Chris, who's going to walk you through selecting your UK investment property. Over to you, Chris.
Thanks, Soph. So yeah, just to just touch on different locations. If we go on to the next slide, please. So there's so many things that you need to take into consideration when looking to invest in a certain location. Um, and certain cities or areas in the UK have more going on than the other. But essentially, what these things are is connectivity, it's future developments, it's regeneration. You know, institutions, jobs, market trends, rental supply and demand, all of this type of stuff is is really, really important when looking at which location to invest in. Um, and we help you with that. We go through, with all of our projects, all of our developments, we talk to you about why the location is going to see the growth that we want from a rental perspective and a capital appreciation perspective as well. So again, this is something that we talk to you about and we kind of guide you through. But if we go on to the next slide, what we see is, a lot of people, especially investors from India, a lot of them do focus on London. And the reason for that is because, London's one of the biggest cities in the UK, sorry, in the world, and they feel safe with their investment by doing that. But the reality is it's not the best place to invest to get the kind of returns that you want. Look, you look at the top investment hotspots in 2025, they're all regional cities, the UK second and third cities. They've got a lower average property price, they've got a higher average rental yield. And the 5-year price prediction is much, much higher. And the reason is because there's a lot going on there. These key factors that we've just touched on are all happening within the regions. Whereas you can see from London, it's double the price, or more than double the price. The average rental yields are half, and the 5-year price prediction is a lot lower. Um, and this is because the price point is so high, and it's kind of hit its limit. So with all of this happening, all of the regions, they're thriving because of this, and more people are wanting to live there because it's a better quality of life. It's a cheaper lifestyle. You get access to better housing, and that's why rentals demand has gone through the roof in these regions as well. So, and that's what we focus on as a business. We don't really deal with central London. We've done some stuff on the outskirts, commuter belts, but our main focus are these areas that you see on your screen. And we'll talk about that in a little bit more detail with this new project that we've got and what I'll talk about. But look, and you can see from this graph here as well, realistically, where you want to be is as far to the top left as possible, where you've got a high rental yield and low average property price. So these kind of four that we've circled here, they're the kind of main investment hotspots. And you can see where London is at the bottom right-hand side there. Next slide, please. So one of these areas that is performing very, very well is Birmingham. And us as a company, we've done a lot there. We've been involved in multiple different developments, and our clients have had a very, very good experience with investing in Birmingham. And I'm going to talk to you a little bit about why. So next slide, please. So Birmingham is one of the most centrally located cities in the UK. You can get to the north of England and the south of England very, very easily. It's actually the second largest city in the UK. A lot of people think it's Manchester. There's a lot more media around Manchester, but Birmingham is actually the second biggest in terms of its economic output, in terms of its population. So, it's a great place to invest. Next slide, please. So it's got a huge amount of potential, and Birmingham has changed dramatically over the past 10 years because of all the inward investment that's been going on. There's been a 30-year plan put in place where they're going to be spending 30 billion on regenerating the city centre. They're 10 years into this big city plan, they call it. They're only 10 years into it, so they've still got 10 years of regen that's happening over that time. So it's already the UK second city, but it's going to become more and more powerful. There's huge demand in Birmingham. The population is rapidly growing. There's over 100,000 professionals, and there's a huge student population as well, where rental demand is incredibly strong. We've touched on the supply and demand problem that we have in the UK. In Birmingham in particular, it's bad. There's not enough residential housing for the demand that there is, which means that rental demand is incredibly high, and rental prices are very, very high for the price point, which means that we're getting really good yields. And look, property prices are anticipated to grow exponentially over the next 5 years. Birmingham, we look at reports from JLL, Savills, again, some of the biggest property companies in the world. Birmingham is one of the best investment hotspots and is going to see one of the best future price growths and rental growth out of any other city in the UK. Next slide, please. This is a really, really important slide. Okay, so again, we talk about these factors that impact why these areas are great places to invest. Birmingham is attracting some of the biggest financial institutions in the world. Goldman Sachs, Deutsche Bank, PwC, KPMG, HSBC have actually moved their headquarters to Birmingham city centre. Goldman Sachs moved their headquarters to Birmingham city centre. Deutsche Bank, 2,000 staff just gone to Birmingham. So the financial services sector in the UK is got the biggest economic output than any other sector. It's got the best salaried jobs. It's in the most demand for these types of jobs as well. So Birmingham is becoming a financially led city. And with all these companies here, you have the opportunities now that you didn't have 5, 6, 7 years ago. You don't have to go to London anymore to get these good salaries or work at these big banks. They're here now in Birmingham, and it's impacting the city in such a positive way that you've got more or better working professionals earning better salaries that want access to better quality housing, and that's where we're seeing rental growth go up so high, and also property growth as well. So this is very, very important and very, very positive for the city of Birmingham. Next slide, please. So we've talked about, again, regeneration, and there's not any other city really in the UK that's got more regen than Birmingham city centre. Okay, it's got, as I said, this 30-year regeneration plan, and it's changed dramatically over the past 10 years. In terms of its retail, it's got the same shopping destinations that London do. In terms of its entertainment venues, in terms of its bars and restaurants, you've got Michelin star restaurants. Its transport links. And one of the biggest things that's happening at the moment with Birmingham is the introduction of HS2. Now, for anyone that doesn't know what HS2 is, it's a government initiative where it's a high-speed rail that's going to be connecting Birmingham and London, and it's going to be connecting them within 40 minutes, a 40-minute train journey. So it's Birmingham's going to become a commuter location, and you're connecting both the biggest city in the UK and the second biggest city in the UK within 40 minutes. So this is a game changer. It's going to be delivered in 2029, so it's only a few years away. So again, when looking at future potential and future growth, these are the types of things where you're going to see massive growth on your property values. Look, the UK it's got quite a big working from home culture as well. So a lot of people are working kind of 2-3 days a week in the office. The fact that you've got this high-speed rail that's being introduced means that, as I said, people are going to be able to commute from London to Birmingham. But what you get with living in Birmingham compared to London is a better quality of living. London is one of the most expensive places in the world to live right now if you compare it to salaries. So the fact that this offering is coming up, people are going to be, they're already moving, but more and more people are going to be moving to the likes of Birmingham because it is a fraction of the price to live. You've got everything that you need there to enjoy your lifestyle. And it's, as I said, it just comes down to quality of living. And that's why we're seeing the regions in the UK at the moment really thriving. Next slide, please. Education is very important as well, when you're looking at investing in any city. Our developments, we are targeting a certain demographic, which is not students. However, it's important to understand that from a student perspective, if we've got a good retention rate, which we do in the U in Birmingham, almost 50% of graduates are choosing to actually stay in Birmingham to get to start their careers and build their careers. And this is, again, a real positive. It's got one of the largest student populations in the UK. And the fact that we have all of these jobs available now with these big financial institutions means that more and more people want to stay and work in the locations that they're getting educated in. Which, when you're holding on to a property for the next 5, 10, 15 years, these students, they're getting the good jobs and getting the good salaries. These are the people that are going to be consistently renting your property over that time period. Next slide, please. And we talk about connectivity. It's one of the best connected cities in the UK. It's got 3 major stations. They're building a brand new station for the high-speed rail. So it's incredibly well connected. As I said, it's one of the most centrally located cities in the UK as well. It's great for businesses, and it's also got an international airport as well, which flies all over the world. So as I said, incredibly well connected city. And again, another real positive for the city of Birmingham. So to move on to our brand new opportunity, and as I said to you at the beginning of the webinar, it's brand new, and it's one of the most exciting developments that us, Joseph Mews, have had the pleasure to be involved with. It's called Number 30 St. Paul's. Okay, and St. Paul's is, if you can go on to the next slide, please. So St. Paul's is known as the Mayfair of Birmingham, okay, and the reason for it is it's one of the last Victorian squares that's in Birmingham city centre. So you've got these old Victorian buildings that surround this lovely, beautiful square, and there's a Grade 2 listed church that's right in the middle of this square, and it's notoriously known to be the best area in Birmingham to live. You feel you're very close to the city of well, the city centre. But you don't feel like you're in a city centre. It's incredibly quiet, it's green, and this is the only residential development on this square. It's very boutique, it's only 55 apartments, and what they're doing here is keeping the existing style of the building, so that the existing facade, keeping the history, keeping the character of it, and they are rejuvenating the inside of it to make it a little bit more modern and contemporary. So here lies an incredible opportunity because it's very, very unique to Birmingham city centre. You don't have anything like this. There is new builds going up, and they all are quite similar in what they offer, but they don't offer this. So prices here, they start at £249,000. It is off plan. It's due to be completed in Q1 2026. So we are only 10 months away. It only requires a 20% deposit, and then you don't have to pay anything else until completion. And because of the quality of and what it's going to deliver and the uniqueness of it all, we are looking at a 6.5% yield, which is very, very positive for the city of Birmingham. We've already sold a lot. We've only launched a couple of weeks ago, and we've sold over 50%. A lot of our existing clients in Birmingham have really fallen in love with this project. The penthouses have already sold for just under £1 million. So if you're actually looking at where values could go in this particular property, there's no ceiling because you've already sold some of the properties for almost £1 million. So it shows you where that appreciation could go over the years. It's also got underground parking for every single apartment, which again in this location is very, very unique. In any city centre in the UK, parking is hard to come by. There's a new development that we sold not long ago, which is right next door for a 100-unit development. There's only 10 parking spaces available at a charge of £30,000. So the fact that you've got parking for this, again, is very, very unique. And as I said, this location, I went there a few weeks ago. The sun was shining, and they are having markets on the square in front of you. There's people having picnics, there's people reading. It's just it's a lovely, lovely destination. And as I said, in terms of its location, you're 5 minutes away from the business district and 10 minutes away from all of the amenities that you need to be that you want. So yeah, a unique opportunity. If we go to the next slide, please. I talk about the location so you can see it here. It's right next to the Jewellery Quarter, which again is very famous in Birmingham. There's a lot happening there in terms of its kind of new build developments and regeneration there too. But all of these kind of white dots and names that you can see on the screen here, they're all the major jobs, the retail locations, the transport links, the bars, the restaurants, everything, and all of this is within a 5 to 10 minute walking distance. So it gives you an idea of how good the location is. Here's a couple of CGIs of the existing building. So it's 2 buildings. On the left, you've got the kind of older style red brick, lovely bay windows, and then you've got on the right, you've got the newer style building where you've got balconies that look over St. Paul's. On the next slide, you'll see that it kind of goes back into a U shape into this lovely kind of courtyard area. This courtyard is going to be lovely. It's got it gets a lot of natural light, and you kind of have every unit is going to have balconies that are looking kind of down into this courtyard. And you can see here with the tree, there's a spiral staircase that goes down into the underground parking. So it's incredibly private. You park your car down at the bottom, and then you get the staircase up, and you're in your apartment complex. As I said, it's very quiet, and it's very secluded. Next slide, please. So here's some of the internals and what they might look like. The developer is incredible in terms of what they deliver. It's top quality. And then I think we've got some pictures of the square as well. This is the Grade 2 listed church. It's on the middle of the square. And one thing about this development, which I love, is that it's never going to change. So you're never going to get something that's being built in front of it. As I said, this is going to be kept how it is for the kind of rest of the time, really. Whereas obviously, if you're buying other developments in different locations, you have no idea what might be built in front of you, and this is never going to change. So that's something very, very unique. And you can see from these pictures how idyllic the location is. And a little bit about Elevate, who are the developer. If you know, next slide, please. So Elevate are one of the biggest developers in Birmingham. They are actually headquartered right next to us on Colmore Row in Birmingham city centre. They've done numerous schemes, and as I said, no stone is left unturned in terms of the quality and what they deliver. From multi-million-pound townhouses to these types of developments to brand new builds, you're in really, really good hands with these guys. It's a pleasure to be able to partner with them and have our exclusive relationship with them, and especially with this particular project. I can't wait to see it come to fruition. Next slide, please. We launched this 2 weeks ago. We actually held an event on St. Paul's Square, and it was a massive success. And here are some pictures from it. And yeah, it was a great evening and a very successful event. Next slide, please. So look, also guys, obviously, this is one project that I've discussed, but we do have other offerings as well. For example, we have a Loom House in Derby, which you can see at the top left there. It's one of our new builds. That's actually being done by Elevate as well. But for any of you with a slightly lower budget, Derby starts at £150,000. Great investment case. So we do have other options as well. We have other Birmingham options. We've got something in Leeds. So, if this isn't something that you might be interested in, then look, we've got other options that we can discuss with you as well. So we do have a special offering for everyone on this webinar today. If you do end up reserving any apartment with us, we will give you £1,000 towards your legal fees. So we are actually traveling to Mumbai as well on the 21st to the 24th of May. There'll be a group of us there. So if you would like to meet us in person and discuss everything that we have in this webinar in a bit more detail, then we'd love to meet you. So please let us know, and we will reach out to you to book a time slot. And look, I want to just this slide is what it takes to be a Joseph Mews client. So, you know, look, we're going to have a poll after this, asking everyone on this webinar whether they want a meeting, a face-to-face meeting with myself or Sophia. But it's important that you understand what it takes to be a Joseph Mews client. You need immediate access to £50,000, you know, and the exchange process takes 28 days. So you need access to this right now to be able to buy one of our developments. You know, you're open to ongoing consultations with expert investment team. You're actively exploring UK property opportunities. You know, if you are very interested in exploring what we have, then please do reach out, and then you have that kind of clear motivation and strategy to buy property. So please request a meeting. If you do request a meeting, please, we will reach out, and hopefully we can get one booked in straight away. Okay. So look, the next steps, you'll hear from one of us here on the screen. But as I said, clicking one of these boxes means that you are wanting us to reach out, and you're wanting a meeting with us. So please feel free to click on what your kind of most important aspect is, or what you're looking for and what you want to discuss within this meeting. And then, as I said, we will reach out and we'll get something booked in. So to Q&A session. I see that we've got quite a few questions, which is great, and we'll get to these now. Look, it's not too late to ask any questions, so please feel free. If you haven't been able to ask a question yet, please put it in, and Sophia and I will we'll get to them. So let's start. How much do we need to invest if we wish to stay in the UK with family? Okay. This is quite a common question, and it's important to know that if anyone on this webinar is looking to buy property in the UK for residency benefits or visa benefits or anything like that, you don't get that in the UK, unfortunately. It's not a way of being able to get those types of benefits. So yeah, unfortunately, if that's what you were hoping to find out on this webinar, unfortunately you can't do that. So I think you're up for the next one.
Yeah. I had a student bank account with Barclays. Will that help me in opening a bank account with them? Yes, to a certain extent. So I know
I think you're on mute, Soph. You're on mute, sorry.
I shouldn't be. Can you hear
me?
me?
No, sorry, you're not. Apologies.
So it really depends. Yes, in short, if you have a relationship with Barclays, it's certainly worth approaching them and seeing whether you know that you can set up a direct debit with that account, because that'll be the easiest route, the cheapest route, and ultimately the fastest route for you. Whether you can set up a direct debit, though, is certainly a question to ask Barclays. If not, then on the basis that you've had an account with Barclays and you potentially have a UK footprint, it should be fairly straightforward to open a UK bank account for you with someone else if need be. Do we have lower deposit schemes, like 10%?
Yeah, do we have lower deposit schemes of 10%? We don't. Most of our developments are 20% deposits. And look, the reason for that, where you normally see 10% deposits, if you're working with like quite a large London developer, for example, where price points are a lot higher, so they're happy to take a lower deposit. But when you're kind of working in the regions or looking to buy in the regions, most developers will always request a 20% deposit. So the answer to that is actually I say that we do actually have one in Ascot, which is just on the outskirts of London, one of the nicest areas in the UK. That is done by a big London developer. So we do have one scheme with a 10% deposit, but as I said, most of our developments are 20%.
how can we remortgage on the property once the prices or value increases? So we quite simply will, same as if you were to take out a mortgage from the beginning to acquire the property. If let's say you go for a 2-year fixed rate, every couple of years we will look to remortgage. Otherwise, if you don't remortgage, your rate will automatically go up, your follow-on rate, also known as a standard variable rate. So normally what we'll tend to do is we'll remortgage. That means we'll go back to the market, review who's going to be the most competitive lender. At that point, you can also capital raise. When you do remortgage, there's no additional cost for that often. So we can look at doing that. That means the first lender is repaid and then the new mortgage is taken over to the new bank, essentially. Are foreigners, I'll take the next one, are foreigners eligible for interest-only options? Yes, absolutely. So we can go into a lot more detail between, what options are available to you, but in short, interest-only mortgages are certainly available to you as overseas borrowers, as foreign nationals. And typically, Chris will probably echo this too, but most of our clients, when they're going for investment properties, will go for the interest-only route for the benefits that it offers from a higher cash flow perspective, just enabling you to grow your property portfolio. So interest only is certainly available to you.
Yeah, I'd say 95% of our buyers who use mortgages go for interest only. It's definitely the more popular option. What is the probability of reselling these units before making the full payments? It's really not advised, to be honest. I mean, look, if that's what you're looking to do, then the UK market, I'd say, is not for you. A lot of that happens within Dubai, for example. That's a market where it might work because people are buying 4 years off plan, and then they're letting the value go up over that time, and then they sell before they actually make any real commitment. The UK doesn't work like that. As I said, it's a mid to long term strategy where you're really going to see the return on your investment is by holding it. But as I said, it's a market where you're investing in that safety and stability of it. So if that's what you're looking to do, the UK probably isn't for you. And also with our developments as well, none of them are significantly long periods until they're actually delivered. They're all in the construction phase. They're all moving towards completion. So all of our developments at the moment are either 6, 12, 18 months away from completion. So we don't deal with long off-plan periods. And also, look, we do have completed projects as well. If you do want to buy something with, and start getting the rent immediately and get a tenant in there renting it, then we do have options for that as well, just to put that out there. Okay, need answers to a few. I think that I don't know that one. So if you want to take the next one.
Yeah. So one of the questions here is, for a mortgage, is it mandatory to execute a personal guarantee? Most banks, it depends on how you're going to structure it, because if you're buying through a company, then most banks will require a PG or personal guarantee. There may be some lenders, there may be specialist lenders that we can work with that may not require it. Ultimately, it depends on the loan amount, how many properties we're looking at buying, and then from there we can go and potentially approach a bespoke lender. And I think part 2 is for you, Chris. Our
pre-leased properties options available. Not really. We don't really deal with that. I mean, as I said, the UK market kind of guarantees your rental. So we do a significant amount of due diligence on, and we get a lot of data from our existing relationships that we have in the UK with these lettings agents or the likes of JLL, Savills, or anyone like that, to understand what we're looking to achieve from a rental perspective. And because of the high rental demand that we have currently in the UK, we have little to no void periods. So no, the developments that we have, they all come brand new. And as I said, we aim to get a tenant set up for you before you complete. So you don't have those void periods. But anything pre-leased, not really what we have. We pay 20% in advance. What if we don't get a mortgage for whatever reason? And so if you can definitely help me on this one. But look, we the whole point of this process, before you exchange, before you pay that 20%, we do all of this due diligence. So you'll have conversations with Sophia. She'll go away. She'll get you indicative terms that we've got from a bank that's going to say, yes, we will give this person a mortgage at this level, at this rate. So it's very, very unlikely that you wouldn't get a mortgage if Sophia says that you will. But look, the deposit for this type of thing is 10% is held in stakeholder, so 10% is refundable, and then the other 10% is insured by the developer. So all of it is actually refundable if you don't get a mortgage. But as I said, it is very, very unlikely that will happen. So if you want to elaborate on that.
Yeah, exactly. So we go into quite an in-depth fact find where we gather the information in terms of your financial profile. So we look at your income, assets, your expenditure, any liabilities that you have as well in the background. So it is an in-depth assessment, and we do run it past banks and base it on today's pricing, but we do run it past banks and their criteria as of today. If the banks do provide a decision in principle or agreement in principle, however early it is in the process, we will also share that with you. And then ultimately all we do is when we're closer to completion, so about 6 months before handover, we'll just go through the fact find to refresh it and then start the mortgage application. And as I highlighted at the beginning, we work with over 750 lenders. So if we often do have quite a few fallback options in place. If for whatever reason plan A doesn't work out, there are other lenders we can then lean on.
So you as well, Soph?
Whereas I've lost it because it's not showing up.
What kind of documentation is required for loans?
So in terms of documentation, starting from the top, we would need a copy of your identification, so passport and your proof of address. From there, we will also need details in terms of your income. If you are remunerated or if you receive a salary, then typically 3 months pay slips. If you're self-employed, then sometimes we may need audited financial accounts, but that isn't always a requirement. We would then also need the bank statements to demonstrate, firstly, your income, and secondly, to demonstrate where the deposit is coming from. And then finally, we would just need details from Chris and the team, which we can gather, which is just details on the property, and essentially the security for the lender.
Looking for leased land for agricultural farming. Yeah, we definitely don't do that. As I said, it's all residential investment, buy-to-let investment that we deal with. So unfortunately, we cannot help you with that.
Is there any Indian banks working in tie-up schemes with UK banks? So predominantly for cases like this, we'd be using UK lenders. Now, again, it's always on a case-by-case basis. There are lenders that we may approach, who have Indian ties, or potentially lenders in the Middle East. So it really is on a case-by-case basis, but the majority of the banks will be based in the UK that would be arranging the mortgage.
Is the property that you're offering to invest a flat, apartment, or a chalet, or detached or semi-detached bungalow? No, it's an apartment building. We tend to only deal with apartments. For investors, they tend to work out better. They're normally centrally located within the cities that we work in around the UK. They're closer to jobs. They have higher tenant demand. And they tend to yield better, and also they're easier to manage. Okay, so they're when you're looking at housing or a freehold house or whatever, there's a lot more to deal with in terms of its upkeep. Whereas all you do with apartments is you pay a service charge and it's all looked after for you. So that's why we only deal with apartment buildings.
Do I have to be residing in the UK to open a bank account? No, not necessarily. You don't have to be UK resident. There are lenders or there are banks who will be able to open a bank account for you remotely. And the next part of that is we would like to build a portfolio and farm. That's probably more for you, Chris.
build a portfolio in a firm. Do we build a firm, LLP? Do we have a local partner for that? No. So look, buying in a company is a really good idea. It depends that we again we can have this conversation in person, but the UK has a double taxation agreement with a lot of countries around the world, and if you're buying in your personal name, then I think you get this with India, but if you're buying in your personal name, you get a £12,500 tax-free allowance. With the first bit of income that you have. So if you buy a property and it's your first property and it's your first bit of income that you have in the UK, we'd always advise to buy in your personal name because you do get that tax-free allowance. However, if you start building a portfolio or you have other income in the UK, then buying in a limited company is a really good idea. And look, as I said, again, we have there's a lot of tax benefits to it. There's a limit on the income tax as well. So again, we work with companies here that can organize all of this for you and talk to you about it in a lot more detail. So yeah, but buying in a limited company is a popular option for our clients and a really good option. Which area would you recommend as it would be the first time investment, Leeds or Birmingham, for a more stable rental income? I'd say, look, again, we do deal with Leeds. We've got a project in Leeds. It depends what you're looking to achieve, really. I mean, Birmingham, from what I've said, you can see that I'd say it's a more stable investment. It's a safer investment in terms of having the tenant demand that you want, and constantly having that person in your apartment that's giving you that rental income. And obviously, with everything that's happening with Birmingham, the fact that it's the UK's second city, you kind of guaranteed that appreciation and that return on investment that you want. With Leeds, there's so much going on there. It's got its own regen happening. The great thing about Leeds is that it's a lower price point again, and it's got that kind of higher yields. But it's less established. So yes, there's a lot happening at the moment and a lot going on. But I'd say it's a slightly riskier investment, but could have more potential. So again, we can have this conversation in person and we can talk about the pros and cons of both locations, but both are great investment hotspots at the moment. But they both offer something slightly different. What do you suggest, off plan or completed ones? Yeah, good question. Look, off plan is a more popular option for our clients who are only putting in that 20% deposit. So from a cash flow perspective, it always tends to be very popular for our clients. Look, the benefit of getting a completed one is that you don't actually exchange or put any significant money down until you get your mortgage, if you are getting a mortgage. So I guess there's slightly less risk in that perspective. Not that there is any risk in getting a mortgage buying off plan either. But also the benefit of a completed project is that you get a tenant in there right away as well. But as I said, with off plan, you are normally buying it below market value as well. So that 20% deposit over the time of construction, we fully anticipate to see some appreciation on that as well. So yeah, there's pros to both. It just depends what you want from your criteria and from your investment, really. Will you help leasing the property as well? Yeah, as I said, look, we are involved in every step of the process, and when it gets to the kind of cornerstone of your investment, which is renting it out and leasing it, we would introduce you to a lettings and management agent who will take the key off the developer. They'll find you a tenant. and they'll rent out the property for you as well. So yes, we aren't the letting agents. We don't do it ourselves, but we have the contacts, we have the companies and the relationships that will do it all for you, and they'll manage it all for you as well. So yes, we do help with all of that. Are all properties leasehold or do you have freehold? Most of our properties are leasehold. Our property in Leeds that I mentioned, that is a freehold opportunity. It is an apartment building, but it is a freehold, which is quite unique. So we do have a freehold opportunity, but I'd say across the board, most of our developments are leasehold. Would Joseph Mews also assist in organising tax compliance, if any, in the UK on the rental income related compliance? Yes. Look, again, we can help with all of that. As I said, we're not here just to sell property. We're here to guide you through the whole process. And yes, we would help you with all of that. We're in constant communication with you the whole time, and even after you complete on your property and you've got a tenant in there, we're still with you the whole way through, even 5-10 years down the line. We rely on repeat business, and we've helped lots of clients build portfolios in the UK. So as I said, these relationships that we have and that we build, we're with you, every step of the way. What are the configurations of various properties that you're offering? I'm assuming. Apologies if I get this wrong. I'm assuming that you mean that the size of these apartments that we that we have. I mean, look, it depends on every development that we have. One beds vary between 450 to 700 square foot. Two beds are anywhere between kind of 650 to 1,000 square foot. So it depends on the development that we're working in, and which location it is, because some developments offer bigger units and bigger configurations, and some offer not. As I said, it depends. Okay, I've already those two. Okay. The return you're talking about is 29% in 5 years. Some of you invest in the UK if India is giving a gift. Okay. Inheritance tax, please elaborate. Yes, there is inheritance tax, but again, we have tax experts that we work with that can help you kind of work around that. And with any type of the UK is it unfortunately it charges tax in many ways: income, stamp duty, inheritance, all of that. But as I said, we help put plans in place that kind of limit that tax that you have to pay. And yeah, it's part of the process. And as I said, we can put you in touch with the right people to help you around that.
Yeah, I think another thing just to highlight on that as well is the UK is a very sophisticated market, unlike probably any other in the world. So although there is inheritance tax, yes, there are taxes. There are taxes in almost any part of the world that you invest in. There are smart ways to structure it in a way where you can just smartly, structure your investments, particularly if you're building a portfolio. It is worthwhile speaking to a tax advisor, consultant who's qualified to give you the advice in that jurisdiction to ensure that you're structuring the purchase in a way essentially that makes the most financial sense for you. But there are smart ways of structuring your investments, in short.
Yeah. And then one here: when we get rent, how much will go to the bank as a repayment loan, and how much an investor can pocket every month? So normally, I mean, again, it depends on if you're getting a mortgage, what interest rate that you have on your mortgage. So it's difficult to say. But also the other costs that you have are your letting and management fee, and your service charge as well. So depending on, as I said, how much you're borrowing with your mortgage or whatever, it's difficult to really give you an idea on that. But what I will say is that as long as your tenant is covering all of your costs, so your service charge, your management fee, your interest rate, as long as they're covering all of those costs every month, that is a great investment. Because look, I know that, you know, a lot of people want to be getting a good income every month and get that passive income, but that takes time. You know, as rental values go up over time, as you buy more property, as you do that, it takes time to get, you know, that income coming in, and that significant income coming in every month. But what we're looking to achieve is the most important thing really is that appreciation. You know, what is my property going to be worth in 5, 10 years time? So as long as you've got a tenant that is covering all of your costs, then you're sat on an asset that is going to be appreciating over that time, and you're going to be getting that return on the investment that you want. So it's important to remember that. Okay, so I'm just going through. Is number 30 St. Paul's a freehold or leasehold property? If it's leasehold, what is the lease period? Um, so it is a leasehold. It's 250 years. And yeah, I mean, look, that's quite common in the UK. It's normally 250, 999 years, but there's actually a new legislation in the UK that which the government has just given the go-ahead to, that landlords will have more say in terms of their leasehold periods, where it allows landlords to increase their leases up to 999 years for a very small fee. So the leasehold period in this instance is pretty irrelevant. But for St. Paul's, is 250 years. Uh,
How high can the interest rates go if the loan is not a UK bank? I mean, it's a difficult question to answer, because ultimately I mean, rates typically on average, I would say, are around the 6.5% mark. Now, depending on the type of rate you go for, if you go for a variable rate mortgage tracking the Bank of England base rate, that often starts off about 0.5% higher, I would say. And then, of course, dependent on the loan to value, will also determine whether you want to borrow 65% or do you want to borrow 75%, will determine those factors. Also, the other things to bear in mind are, what's your source of wealth? What is your source of income? And dependent on how easily that can be demonstrated, also impacts the interest rate. So it really does vary, and that's why it's worth having a fact find and researching the options and running through, you know, what is available to you.
As you mentioned, we would be saving £141 at the end of each month. Have you accounted for recurring charges of the leasehold? I'm assuming you're talking about service charge here. The service charge in the UK, you know, it can fluctuate a little bit, but it's not like it used to be. There is a duty of care now that developers have, where they have to show you everything that's involved with the cost of running the building and looking after the building. So the tenants now get a very good idea of what that is. So service charges tend to not fluctuate too much at all. And look, you know, as we've got to focus on as well, is that every year we anticipate that your rental is going to go up. So as the service charges, you know, stay the same, they're going to become less and less significant, because your rental return is going to be keep going up and up and up. So the recurring charges will always be pretty similar. There's a couple of questions on here that I'm just going to cover. People asking if we're going to be visiting Delhi. Not in the next trip that we do. But the fact that there's quite a few people asking about this, then maybe Delhi will be the next trip that we do when we do visit India. What is the rate of a rental appreciation in Birmingham? So at the moment, we're looking around 3% a year. And look, what's really helpful in what we do here and what we provide are cash flows. So if you get to a point where you like a development and you want to invest in a particular development, we will pick out a unit and we'll run a cash flow on it, depending on whether you get a mortgage or whether it's cash or whatever. And we'll look at everything that's involved with buying the property, the costs with it, and also we look at your kind of anticipated rental return, but also we look at your 5, 10, 15-year investment performance as well, where we look at where your rental growth is anticipated to go, and also your capital appreciation and what your return on your investment is going to look like over that 5, 10, 15-year period. So look, all of these figures we can look at in a bit more detail, and run appraisals and run cash flows as well, which are very, very simple.
When we get rent, how much will go to the bank as repayment of loan, and how much can an investor pocket every month? It really, I mean, I think the cash flow that we looked at the example is probably the best thing to base this answer on for now, and then dependent on your individual circumstances and the rate that we apply will determine. But that's, I would say, yeah. So having a look at this as we have on screen, as you can see, £141 is what you're netting every month, which equates to £1,692 per annum. But again, that's based on the interest rate on the screen. Should that interest rate go down or go up, of course, that's going to impact the monthly payments and ultimately the monthly net income.
And what is the size of each apartment that you're offering for an amount of £250,000, £249,950? How many bathrooms? So that would be a one bed. That's the lowest price apartment that we have in St. Paul's. It will be a one bed, one bath, and we're looking at around 450 square foot. But look, you know, sizing it depends on where you are or what development that you're buying. So for example, we've got a development in Leeds, which is just outside the city centre. It's in the countryside. The apartments are a lot bigger than what you see in the city centre. You don't have the size or the option to really build very, very big apartments. But from a tenant perspective, it doesn't matter. You know, it's still going to get rented because you've got that demand. So that's the starting point with St. Paul's. It's one beds are around, they range from, I don't know, 450 square foot to 600 square foot for one beds, and then the two beds you're looking at 700 square foot to 1,000 square foot. So you know, they range in different sizes. Obviously, that means that the pricing is slightly different depending on the size that you buy, but there's a really wide range of sizes and price points as well. Can I meet one of your team members in person in the UK? If yes, I can book an appointment when I'm traveling this month to London. We can organize. Yes, yeah, we can organize that for you. I mean, our UK team and our team over here in Dubai and South Africa are different. But we can always organize for you to meet someone in person, or if you wanted to go and see one of our developments, we can always organize that and for you to meet the developers and things like that. But look, as I said, I'd really recommend that if you wanted to have a meeting, we get a Zoom booked in immediately, and then that'll be the next step. I think that's the best way forward. All right, guys. Well, look, that's all the questions for now. Thank you so much for getting involved throughout this whole webinar and asking lots of questions. It's great. And I hope you found it educational, informative. And again, thank you so for coming on. It's always a pleasure to have you on. And yeah, look, we'll be catching up with everyone who's requested meetings. So thanks again.
Thank you very much, everyone.